I am Anuj, with me Surbhi here in Mumbai studio, and Lata will be joining us very soon from Delhi. Well, of course, the market yesterday collapsed, and it collapsed from the levels which we were watching, and after that there was no level which was sacrosanct. You could blame it on crude, you could blame it on the GST news, whatever it is, but the market ended at the lowest point. This morning, with overnight decline in crude prices, SGX Nifty is indicating a bit of a relief run, but let's see if that is sustainable or not. Surbhi, hi, good morning.
Good morning, Anuj. I was actually missing you last afternoon.
I was missing being here.
Yeah. Because in the morning, you spoke about how, at least in the futures and options market, FIs have gone all in, and you were talking about those short positions build up. And my God, how the ground just gave way in the second half. But interestingly enough, I mean, the only one point that we need to get back on the screen is that price of oil. Because we were almost at 69 around closing bell yesterday. Now we're at 64.5 thereabouts. And we don't know if this means that the worst of the price spike is over or not. But in terms of levels, yesterday the bank Nifty was down almost 800 points at one point in time. The Nifty slipped below 10,800, then it recovered. Now, just because oil is back at these levels today, does it mean that the bulls will live to fight another day?
You know what? For the answer to that question is, was the fall in crude price a reason for the market to fall, or was it an excuse for the market to fall? And I tell you, Surbhi, you pick your days. Yesterday was the day to pick when the market broke those levels that you had to really go all in, and you had to make a lot of money. I think a lot of traders would have done that. And this is what in Hindi you call so sonar ki ek lohar ki. It's a bear market. In bear market, rallies fizzle out like this. 6 days of gains taken out by one single day, 2 days. Let's put it that way. And the market collapsed once those important levels were given up. 10,950 was the level we were watching on the Nifty. 27,600 was the level that we were working with on Bank Nifty. The moment those levels broke, it caved in. Now, obviously, these levels now become very important resistances. But will the market go there in the first place? That's the question you need to ask. If you're asking me what are the levels to watch now, the sacrosanct levels 10,741 on the Nifty and 26,824 on the Bank Nifty. These are the closing lows from where we bounced back last time. Yeah. So, do we test these and make a kind of a double bottom? The FI data today is not all in. Today is slightly less bearish than yesterday. Yesterday was very bearish. Today it's not that bearish, but it's still a bit bearish, but not as bearish. But again, the question I'm asking is, was the market decline entirely because of crude? If you see what's happened this week and this month, again, the MSCI India this week is down 3.5%. EM and Asia Japan are quite okay. And this month, now it's 2.6% for MSCI India. Compare that to 4% rally that you've seen in Asia Japan and emerging markets. So I think what you don't want to do is ignore the size of yesterday's candle.
Oh, yes.
You can't ignore that.
It's the biggest, in fact, since the 13th of August. I mean, I was going back and looking at the last time we had an 180, 200 point dip.
Exactly. Yeah. So this daily candle that you formed yesterday, you just cannot ignore. And as long as this gap is not filled entirely, which is if the market does not take out yesterday's opening level or yesterday's high level, the texture of the market is a sell on rally. The bears are now in control of this market, and they would want to sell every rally. Now, what would happen today is there's a good chance that initial uptick gets sold into, then at lower level there is some buying again. I would want to see if that buying is sustaining or not, Surbhi. That's important. Today, the risk reward perhaps is not in your favor to try any large trade. That was yesterday. That trade was reserved for yesterday. Today, you want to observe, what's happening. But my sense is that, this is how bear markets play out. And yesterday's candle has opened the possibility, if 10,741 also gives up at some point, for the market to test 10,500. But take each day as it comes. For today, let's see if 10,741 is holding or not.
Oh, well, absolutely. So we'll have to look out for those levels. Now, yesterday, another thing that was very, very apparent was all this talk about whether the GST hope has completely faded away or not. And that did a lot of price damage to stocks like Maruti, etc. In fact, on that note, let me bring in Lata into the conversation as well. She's joining us all the way from New Delhi, out there to speak with a whole host of experts from JP Morgan. Lata, morning to you.
Good morning. Yes, we're going to get a host of experts from JP Morgan to weigh in on so many global issues. But just for starters, the Aramco, as Anuj was pointing out, the crude issue was big and India would be a negative trade if crude prices were to rise. And to that extent, I think today a relief rally would be at least a recovery. Rally is too strong a word these days. A recovery perhaps is in order. But as Anuj was pointing out, there are a lot of local cues for the slowdown. And, bond yields have not really fallen off. And there is always this fear that tax collections will be lower and therefore there could be greater government borrowing in India. So bond yields in India, even in the US, bond yields have not really nudged lower because of the crude fall off. So we have to wait and watch. My sense is the other big thing the market will react to is the GST Fitment Committee clearly saying that there will be no cut in GST rates on autos. I am not very sure this is going to be very negative because a lot of automobile companies are complaining that because of this expectation of a price cut, buyers are not coming in. So I think a sense of certainty that we are not even considering a GST rate cut could actually be a relief recovery in auto stocks, and plus, of course, crude prices falling. Today, I would still think that a recovery is in order, but I buy the overall argument that Anuj is making, that this fall is not at all related entirely to Aramco. It was a very useful catalyst in the fall, but there are a lot of slowdown blues, and therefore, we should not run away with the idea that there are higher lows. My fear is that there can be a lot of selling. And of course, I will in a minute have James Sullivan, the head of ex-Japan Asia Pac Research for JP Morgan, to discuss exactly this, what they make of the place of India in the context of the trade war. Do we have any place in, the investments coming out of China and the domestic slowdown, the recovery? What are they making of the economic slowdown? So we are going to get a lot of solid FI opinion on what they make of India. My own sense is today there's a recovery, but not overall. We are in a bad spot.
Yes, no taking away from that. Lata, we're going to wait by for those details to come through. In fact, Anuj, another point yesterday was this huge selling in financials, and it got me back to the chat that we had with Suresh Ganpati, the Macquarie view that people are so bearish on banks. I mean, Axis was tumbling 4-5%, the way ICICI, HDFC Bank, it was just kind of all fall down yesterday.
Yeah, that's the problem for this market. The biggest sector of this market is under a bit of a stress, and you're seeing that not just earlier it was about Yes Bank and you sort of ignored that. Then it was RBL Bank. Okay, RBL Bank started to fall quite a bit. The last few days, the weakness is really coming in from stocks like Axis.
Yeah.
Axis was one of the strongest stocks, right? Kotak, HDFC Bank. So at the end of the day, the obvious part is that everyone is lending to the same economy. Yes, there are companies, there are banks where the checks and balances are better than the others, but beyond a point, we are all derivative of the same economy.
True.
So at the end of the day, if there's problem in a part of the economy,
MSME or any particular sector,
that will reflect overall, and that's the problem when your index becomes too top-loaded or too heavy with one sector. Because if that sector goes through a bit of a problem, you remember that the first time it happened was with IT.
Yeah.
Then it happened with infrastructure. Yeah. This time it's financials. Yeah. That will always happen. When you load the index with just one sector, that will, in good times it will look good. In bad times this will happen.
Okay, let's see whether some of that negativity of yesterday reverses today or not. It's time to get started with the big calls. Here's what the wise experts have to say as we get set for trade this Wednesday morning. Michael Hartnett's note on the key takeaways from Bank of America Merrill Lynch's Global Fund Manager Survey says that they remain contrarian bullish as the September survey shows only modest improvement in risk appetite. Cash levels dropped to 4.7% from 5.1% in August. Their bull and bear indicator remains extremely bearish at 0.7. Investors say fiscal stimulus is essential to boost allocations to stocks, EPS expectations, and turbocharge nascent rotation from growth to value.
Okay, and we have Lawrence Balenko of CLSA with the technical view that this is the first time since 2013 CLSA Investor Forum that the Nifty has come up in client meetings as a major concern. From a chart perspective, the Nifty has essentially been range bound between 12,000 12,070 to 12,118 on the upside. I mean, that's the peak, of course, and 10,000 to 10,100 on the downside. Support zone for the growing concern to turn into an outright bearish outlook for the market. CLSA believes that the current consolidation pattern is merely a pause. Counter trend move on the way down to the 10,000 to 10,100 support zone. The two large cap sell ideas are Reliance Industries and TCS, the two largest stocks that we have.
Okay, if you start shorting those two, then we know where the Indian index is going. Anyhow, let's quickly move on to the next one. The money market views now coming in. This is from Pramit Brahmbhatt of Veracity. He says that the rupee may get some relief on the back of softness in crude oil prices. The trading range for the spot USD INR pair is seen for the day at 71.20 to 71.80.
Okay, and Dhaval Dalal of Edelweiss says they continue to remain bullish and net buyers of bonds at current levels. He says risk-reward ratio is in favor of investors at current levels. In the absence of sharp and unexpected uptick in inflation, he expects the 10-year bond to trend upwards 6.6% in the near term and eventually towards the 6% in the medium term.